Hello everyone, welcome again. We were studying intermediary legislation rules number 35 in the previous video, which are personal service companies. I told you that when someone does not want themselves to show as employed, they normally tend to show themselves as self-employed, and they make up a nominal company, a made-up company, which is not in actual terms a company, but it is just a company in the books. So they make up a company and then they provide the same services which they used to provide as employee. Now they provide through a company. Now when they provide through a company, they can show themselves as self-employed. Benefit of showing themselves as self-employed is that not only he as self-employed will have to pay less NI, but also his employer, his ultimate employer, will have to pay less NI as well. Alright, so in that case, IR 35 rules apply, which I showed you in the previous video, and I asked you that we will do a little question in this video. So let's go ahead and do a small question. Now I want you to look at the ACCA exam kit, which is ACCA P6 exam kit, and mock number 3, please. Now mocks, when you open the exam kit, there are a few questions, and when you finish all of the questions, there are about 44 questions I think in the BPP exam kit, and when you finish all of them questions, there are 3 mocks. Now mock number 3 is a latest exam, which is an exam of June 2016. Alright, now when you finish this lecture, you can go and see that specific question. It is question number 3, and we are doing the part number C, I think, which I am going to share the screen with you in a minute. So when you finish this lecture, you can open up your PPP exam kit and then go to mock number 3, question number 3, and part C, I think. Alright, which is relevant to IR rule number 35. So I will just go ahead and share the screen with you. Now if you remember from your previous lectures, I told you once that please do not look at the past papers as far as ACCA P6 and F6 taxation exams are concerned. Now the reason I asked you that do not look at the past paper was that because past paper are not in the updated form, right? They are in the old form as they were examined. Now in fact in this video, as you can see on your screen now, this is an actual exam paper, past exam paper. Now only at this occasion I am showing you a past paper. I won't show you any other past papers. I'm only showing you to tell you that why you should not look at the past papers. Now this question which we are going to do now, it was examined in June 2016 exam, and as you can see on your screen, it is a past exam paper of June 2016, which I have downloaded from ACCA's website. Now you remember that when we talk about June 2016, could you tell me that which tax year was at that time? So tax year which was examined at that time was previous tax year, which was tax year 15-16. Alright, so dates will be different here, as you can see on your screen. This is question number 3, and its name is Eric and Zach. Now I'm just going at the end of the question where it says the requirements. Now it tells you the requirements. Now we will just do the requirement number C, which is relevant to Zach. Now wherever it says in the question 15-16, please make sure you change it to 16-17. Wherever it says 15-16, please make sure you change it to 16-17, and that is the change that we will have to make. So let's read the question. It says calculate Zach's taxable income for tax year 16-17 if the personal service company IR 35 legislation were to apply to the fee income received by While Limited, Yo-Yo Limited. Alright, so what happens is that he provides services through an intermediary company, and he received a simple fee, and he wants us to and he says that if IR 35 rules apply to that specific fee, what would be Zach's taxable income? Now please remember, he's asking about Zach's taxable income. He's not just asking us to just calculate the deemed employment income. He's asking us that how much will be taxable income of ZAC. All right, so that's the reason that when you are reading the question, please make sure you read the question very, very carefully. Look at what the examiner is asking. All right, so many students, when they attempted that specific question, they did not understand the requirement at that specific time as stated by examiner. Now what they did is that many students, they just simply calculated the deemed employment income and they omitted the other bit which was required as well, which was worth 1.5 mark and which was easy as well. Now let's look at the question itself on the previous page from here, which is ZAC. All right. Now another thing, while you attempt the past papers, while you do the questions in the exam kit, now exam kit is exactly the same questions which were examined quite long ago, but they are just updated version. They have changed the dates. Like I showed you now, while reading this question, we will change the date to our current tax year. So if it says 15/16, we will change it to 16/17. All right. So that is the only change that exam kits change, and they also change the rules as well. If something is omitted from the rules, now they will also omit that rule, and if there is any amendment needed, they will amend them them rules as well. I will show you in a minute, because when it was examined there was some different rules than now. I will show you that as well. Now the reason I was saying that when you're doing the questions, when you're doing the question practice, always go at the end of the question and read the requirement. Now when you read the requirement, when you read the question requirement, although that ACCA P6 exam questions are very, very huge questions, there is no doubt about that. They are very huge questions, 1.5, in some cases 1.5 pages long, and even some cases 2 pages long. Now although they are very, very huge questions, but you know, when students look at the question, they think, oh my god, it is a huge question. How I'm going to start that question? Now the easiest way to start is that question is always divided into different sections. Now even if we look at this question, which is question number 3, now it starts from here. Now it tells you different information in different sections. Now first heading is ERIC, then it says capital transactions, then it says damaged painting, then it says Melenga PLC, then different thing, and finally it says ZAC. Now after that, the requirements are again divided into different sections. First one it's A, then it's there is B part 1 and B part 2. So what I mean to say is, now because we are looking at requirement number C, so it says ZAC. Now this is the requirement which is relevant to ZAC, so we will only see this portion which is relevant to ZAC. So it says ZAC, so there is no need to read the full question, so we will just go on to the relevant portion just to save ourselves some time. All right, so we read the requirement which was relevant to ZAC, which we are going to do now, which is requirement number C. Now in order to pick the relevant data in the question, I just went to the straight heading which says ZAC. Excuse me. Now it says ZAC is sole shareholder, director and employee of YoYo Limited. Now it tells us that he is a sole employee and director of YoYo Limited. Hang on, just let me see as well. Director and employee of YoYo Limited, a company which provides consultancy services. Now this company provides consultancy services, and ZAC is the only shareholder and director of the company. Now in the year ended 31st March 2016, it says, please make sure you write it down as 2017. So 31st March 2017, please. YoYo Limited's gross fee income from the relevant engagements provided by ZAC will be £110,000, so no need to change this one. Then it says in the tax year 15/16, please change it to 16/17. So in the tax year 16/17, ZAC will draw a salary of £24,000 and dividends of £50,000 from YoYo Limited. Neither YoYo Limited nor ZAC has any other source of income. Right? So this was our question, and we know the requirement as well. Now we know how to solve this question because IR35 rule involves in this one. So we have seen in the previous video from our notes, we know that we do is we take all the takings, all the earnings from the company, and we take 95% of that. All right. Now after doing that, if there are any deductions, if there are any expenses of the business, we deduct them as well. And if there is any salary paid, we'll deduct the salary. If there is, and if we have paid any salary, then obviously we will have to deduct national insurance contribution, which is relevant to employers' national insurance contribution. You remember? After deducting that employer's national insurance, what we have to do is we will also deduct, after deducting the national insurance contribution, that will be our final figure, on which what we have to do is we'll have to deduct the deemed national insurance contribution on the earnings. Now in order to do that, what we do is we take the earning, which will be our net figure, multiplied by 13.8 divided by 113.8. all right, that is the way to do it. Excuse me. Now after doing that, that will be our figure, and that will be our final figure, which is our deemed employment income, and you know, that is the employment income. Now because that is till here, that is end of our you know, IR35 calculation, which is deemed employment income. Now after that, if question asks something else, then we will have to do that as well. Now please make sure you read this question, and if you want to write it down, you can write it down, or if you do not want to write it down, if you have the exam kit in front of you, just open your exam kit and go to the mock exam 3 please, and it's question number 3 part C. Right, so I'm just going to cancel the shared screen so that we can do this question on the board together. So let's do it together. First of all, it says a relevant, so we'll do the thingy first. Deemed employment income calculation. So take 95% of earnings. 95% of earnings. So how much the earnings are? It's £110,000. So whatever the answer is here, actually we'll do it together as well. So it's bear me 1 second. That's £110,000 into 95%. It comes to 104,500. So that is the answer. Alright, so we'll take 95% of earnings, then we deduct the deductions if there are any. Now in this case, there is a deduction of salary, and how much the salary was? 24,000. So less salary, which was in this case £24,000, less NI on salary, and NI on salary, you know that's what the rates are. So for that we will have to go to our notes, and we can check the rates of national insurance contribution, which is class 1 secondary. Now for national insurance contribution, from £1 to 8,112, we don't have to pay anything, and above that we'll have to pay 13%. So salary is £24,000, less 8,112. So whatever the answer is, multiplied by 13.8%. So let's do that. So let's do that. 8112 into 13.8%. That come to 2193, right? So that is our employer national insurance. Now some of you might be thinking that I have omitted one thing here, if you remember. Now one thing, £3,000 worth of employment allowance. Now the reason, because in this question it said to us that there is only one employee, which is Zach. So if there is only one employee, the employer can deduct £3,000 employment allowance, right? So if it would have been previous tax year, now in the previous tax year we used to deduct the employment allowance, but from this tax year rules are changed. Now say for example, if there is only one employee in the company, we cannot deduct the employment allowance. Alright, so if there is only one employee in the company, we cannot deduct the employment allowance of £3,000. So that's why I did not deduct the employment allowance from this one. Alright. Now say for example, if there would have been more than one employee, again, even if there would be more than one employee and employment was, the national insurance on employment income, national insurance on the salary, was 2,193. Say for example, if it would have been this same amount, then the deduction was £3,000. Now what would happen is that the remaining amount would not be repayable, because we have to claim on the national insurance contribution. We cannot just deduct it, we cannot just, it is not repayable, because first we pay it, then we claim it. I hope you get my point, that even if it would have been the second employee, £3,000 would not be deducted from this one. So we can only reduce this employment NI to 0. It cannot go into negative. Alright. So let's do the question. Let's continue with the question. So that is deducted, and what happens is after that, so whatever the total amount is, so just add these figures. 104,500 less £24,000 less 2193, that is 78,307. Deemed NI, would be 78,307 multiplied by 13.8, which is part of our formula, divided by 113.8. That will be deducted from this one as well. So multiplied by 13.8 divided by 113.8. So it comes to 9496. So 78,307 less 9496. Please make sure you redo these calculations, because sometimes there is a possibility that I might do it wrong, or I might omit something. Right, so this is our final figure. This is our deemed employment income. Deemed employment income. Now, although this is our deemed employment income, what examiner is asking in our question is a little different thing. So let's read what the examiner is asking in the question. So it says, bear me 1 second. It says that calculate Zach's taxable income. So it is asking about Zach's taxable income. So we will have to do something else as well. So that is Zach's taxable income. Alright. So what we do is we take the salary. So whatever the salary is, £24,000, and we'll deduct. We'll also add. Employment income, which is deemed employment income. So employment income, which is 68,811. So whatever the total amount is. Let me do it on the calculators. I'm not very good on the figures. Plus £24,000. So it is 92,811 less personal allowance, which is £11,000. So whatever the total is, that is our taxable income. That is taxable income of Zach. All right, 81,811. That is taxable income. That's what was required in the question. Now please make sure, do not look at the answer from the ACCA's website, because if you look at the answer in the previous section, not only the national insurance rates were different, not only these limits were different, but there was also we were allowed to deduct the employment allowance, and even employment allowance was different as well. So please make sure, do not look at the answers from ACCA's website. Even if you are, even if you want to look at the answer, you can just note down these figures, or if you want to look at the proper answers, and if you do not trust me, then you can go to the BPP's website, BPP's exam kit, and on the end of the exam kit where the mocks are, it is mock number 3 and question number 3. So mock number 3 is basically the same exam, which was examined in the June 2016. All right, so that's it for this video. I will just wind up this lecture, and I will see you in the next video, and we'll start next chapter, which is employment income additional aspects. So we'll see different investment schemes of employment. All right, thank you very much, and goodbye.